Good morning, good afternoon, good evening, traders from across the globe, especially you premium members. We are here today. It is Friday midday, Friday, July 20th, 2012. We are looking at the reason why these indices have turned south on us. And there's some pretty apparent reasoning on the charts why we should now start looking back for the downside. And I think we'll go over that now. This way, possibly, we can catch this afternoon downside trade. So let's get right into it. Traders, let me just say this. We all know this, but if you do not, please be aware. Futures trading can be extremely risky and cause substantial financial loss, and it is not suitable for all trading accounts, nor is it suitable for all types of people. I don't care how much money you have. So if this is not for you, and if you don't have enough money for risk capital, please do not trade these markets. Make sure you always use stops. Let's go forward. We're looking at the emini S&P daily bar chart midday on Friday, and what you will find is that now we can clearly call this a double top. Traders, one of the things that you must recognize about me, Oscar Coraboni, if you know me, if you've been around my trading rooms or my Omni Trading Academy for a while, you know I never pre-call or I never tell a market what it's going to do. I allow it to tell me that, Oscar, here it is. I have turned. Now you may join in. Then I join in. So, of course, this double top was staring us in the face as of yesterday's close. But you cannot call that a double top right away, and I'll show you why. First of all, you're in a really nice rally. You got above the Omni average. It's been bullish, bullish, bullish. You got above this major resistance line. I'm going to darken it in now so it looks a little more thicker for you. You got above this major resistance line and continued to climb. So, yes, if you want to jump out ahead and say the market definitely stops here, I'm calling it, you can. But I prefer to say keep an eye on this and just go with the analysis the way it presents itself. If the analysis is bullish, go with the first trade that's bullish. If, in fact, it turns out to be a double top, that's what we'll do. So that's what I'm using for analysis last night, Thursday night, to figure out what to do on Friday. So I decided we will go with the buy first because all of the analysis is bullish at this point in time. Indicators bullish through the roof. I could go over all of them, but why bother? As of last night, all indicators looked quite bullish on the indices. I am not going to tell the indices that they can't go any higher, right? Not my job. My job is to read the charts, read the tea leaves, if you will, and report my findings to you omniacs. So I read this and I say, okay, we can start off with a buy. Let's see what happens. And here is what happens on Friday. Friday, the market opens. It dips a little right into our buy area and takes off, and we get out and take a profit. But because it did not continue up and try to make a new high, I immediately told my omniacs, it looks like this is beginning to fail. So we took profit on our longs and are now looking for a short. The Omni arrow has flipped, and we will be selling a rally today if we get one. The Nasdaq was just up at 25.25, and the S&P was right here at 1360. You know, I'd sell it a bit higher, but not right here. Maybe a little bit higher up here somewhere. So we need a bit more of a rally to get in, but I would certainly want to sell for the rest of this day. The Omni arrow has flipped. There is this to keep in mind, though, when you're looking at the S&P chart. There is this support line which just got breached right now. It doesn't mean you're going to settle under it. If you settle above the line, it's not breached. But it looks to me like you will not just settle below the line. You're probably going to make a new low this afternoon. That's what's expected now. So we are selling the rallies after we bought a dip and got out successfully. Thank you, gods of trading. We are now looking to sell the rally. Some of the reasoning is before your eyes. But remember, now we have a double top. Now it is a valid short market. Double top work, you got at least 2 days coming, right? Today, tomorrow, or Monday, I should say, we will go down again. So keep in mind the double top gives you a free trade Sunday night into Monday. The likelihood is it goes down again. So that's the S&P. Let's move along. Let's move along to another chart. Let's look at the bonds. I'm going to show you a couple of charts now which will give you our absolute reasoning why we need to go short. Traders, you are looking at the 30-year T-bonds. The 30-year T-bonds started to come off for the last few days. 1, 2, 3, and our market got bullish. The stock market immediately got bullish. But if you recall, I drew this line for us. I put this chart out on chart upload for the last 2 days and referenced it and said, traders, if we hold this line, we will get bullish in bonds and the S&P will flip. If we break the line, well, that looks bearish. So as of last night, the analysis was still pointing lower. Remember, here's what the market looked like on Thursday evening, and I always do my analysis the night before and then apply the work the next day, so I don't know what the market's doing for Friday, right? We do analysis on Thursday to trade Friday. Here's Thursday's close. Indicators are bearish across the board. This is definitely still moving lower. It hasn't quite hit the line. It is bearish still, but I know if it hits the line and holds, we have to be cautious. So while we were long the Nasdaq today, I watched the bonds. The bonds did this. They got close to the line on the opening, turned around, and started to rally. As the bonds rallied, I said, okay, traders, let's take our profits on our long Nasdaq and look for the short side. And that was a great, great trade, basically because we watched the bonds. Now, bonds held support like it did here and like it did here. And bonds, I mean, there is no arguing what type of market this is. It starts on the bottom left corner of our screen, heads all the way to the top right corner in a straight upwards fashion. This is surely a bull market, no questions asked, right? So if it holds a support line and it's a bull market, you're supposed to really pay attention. So as soon as I seen bonds hold the support line today, I looked at the dollar index, which is key. If dollar index and bonds are going to hold, S&P is going to crack. So is Nasdaq. So I immediately pulled the dollar index next. The dollar index, first of all, we knew that it had the double top reaction a long time ago and started to go down into what looked like possibly really just a bull flag forming right here. You know, it's basically what it looked like it would be when it was done forming. So here you are now. You have your bull flag formed. But what I looked at was the fact that the dollar held yesterday's close. It held it as a low this morning and started to rally. Now we know this. When the dollar is going down, the S&P is going up. When the dollar is going down, the S&P is going up. That has been the relationship lately. When bonds are going down, the S&P is going up. Well, right now, as of today, you have dollar going up. It clearly means the S&P will be going down. So that's why we immediately took profits in the Nasdaq. That's why this afternoon you need to be selling rallies in the S&P and Nasdaq, and that's why once again Sunday night into Monday you will need to sell your rallies in the S&P and Nasdaq. So this is what led me to flipping the arrow. Now that the arrow has flipped and we got out of longs and we're looking for the short, let's look at reasoning to be sure we're correct. Let's go look at the Russell. Okay, traders, here we are, Russell Index. Today is a very important day. Hold or bust. What will happen? Hold or bust. If you ask me, it's going to bust. It's not going to hold. It's going to bust and we're going to come down. Now, that is only my opinion and I don't care what I think personally. If it holds, we buy. If it busts, we sell. It doesn't matter what I think. Doesn't matter what you think. It doesn't matter what any of our opinions are. Let this chart tell you what to do next. If we hold that spot, we rally. If we break that spot and settle under it, we are coming back off. So that's another chart that I looked at. And, you know, you start to look at your technical indicators and you realize that they've went from overbought to now in sell mode. Before today started, this was looking up. As of today, it's broken. So, and most of the indicators are the same way. They just started to break the other way. So now you have indicators pointing lower. You have reasoning, clear reasoning. If you have a dollar index going up and bonds going up, you will certainly have pressure on your Russell, your S&P, and your Nasdaq. So that is what we're expecting. This is our reasoning why I would like for you to be selling rallies, or at least considering that. But there is more. Let's go look at our Nasdaq. Nasdaq market. It worked and worked and worked its way all the way up to our target, right? We knew OTAPA was going to be the target. We talked about it. I put that video out when we were down here. Next step is go reach OTAPA because the other indices were there. It got above it for a day. One day, turned around and did this. What happened here? You got above it for a day, turned around and did this. Ba-boom. Well, actually, you got above it on this day, turned around, went under it. Next day, you couldn't handle it anymore. It is likely the fate that we are going to see right here. So that's ugly. Ugly, 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 if you ask me. Then there's this. We looked at this double top, right? We looked at this channel that we're in. That is clearly pointing towards, it's broken the channel, and now we'll come back to at least Otapma and then probably lower down here. So, traders, we are absolutely looking at the downside, at least for the rest of Friday, and certainly I'm going to be looking for that on Sunday into Monday if, and if is a very, very big word, if we settle below this trend line. We need to settle below this trend line. If we do, then we remain bearish. If we settle above it, we step off of thinking bullish or bearish and allow the market to show us what it's going to do next. So, plan of action this afternoon, if we get a decent rally, we sell into it. Plan of action for Sunday evening, if we have settled down here somewhere, we sell a rally. So there's my presentation to you. I hope that you traders in the premium room see this, do your own homework on it, and can use this to help you trading Sunday night through Monday and for the rest of Friday afternoon. Thank you so much for showing up at the class, traders. I really appreciate you coming. And I really hope that this helps to get you in tune with what's coming up next and how to read these charts. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.